Hey everybody, MVP here. Hope you're well. It is Saturday 24th of June, later on in the afternoon. Very cloudy day down here in West Sussex, UK. So I just want to give you a quick update how the week went. I didn't get that much chance to trade. I did a few early sessions, a couple of lunch times as well actually when I got time, but not too much. So I'm just going to talk you through what the currencies did using my strength meter and my strength meter derivatives, and anything else really that comes to mind while I'm talking through. Here I am at Fxcorrelator.com, my home website. Go there, have a look around, plenty of free stuff. So without further ado, let's have a look at the week. Okay, what I'm showing in front of you is actually a customized version of my strength meter. I haven't got the strength meter up at the moment. I'll show you that in a minute. What it tends to do is it allows me to fix the start date for the currencies. So here they're starting around 18th, I think, which was that Sunday? Yeah, I think it was Sunday. Then 1, 2, 3, 4, 5, virtually towards, actually it was early afternoon on Friday. I didn't get the downloads on that. I wasn't trading Friday night, and I haven't managed to upload it yet on the Saturday from my platform, but it gives you most of the week here, and we're going to have a quick talk through the currencies. Currencies each have different colors. There's 8 currencies on there, the G8, the big G8 set of currencies, and up here, if you can see this, just shows you the 8 currencies and their colors. Very quickly, Euro's blue, red for sterling, orange for Aussie dollar, grey for Swissy, the yellow for the Japanese yen, turquoise blue for New Zealand dollar, the brown for CAD, and green for greenback for USD. I'm also going to move these little critters around just to give you an idea of what's going on. If you look across here, I don't know if you can see that says 74 at the moment. That's an approximation of how many pips each individual currency moved either above the zero, which is the white dotted line, or indeed down here below the zero. Very roughly, don't hold me to this, it's not exact to the centimeter or whatever. Just gives you a rough idea of where the currencies moved. And remember, all currencies trade as pairs. So this is basically the strength meter is an amalgamation. You throw all of the different 28 pairs into a pot, and it calculates how much each currency has moved individually. So when you see currencies down here deep in the deep south, that means that they've sold off, a lot. And what you would do if you were trading these against stuff up north above the zero, that's good. It's a combination of both the sell value and the buy value. You combine those two together, and that's how many pips you will have made or moved on your currency pair. Yeah, makes sense? So the name of the game is always trying to match stuff that's selling below the zero to stuff that's above the zero. Yeah, you sell currencies that are bearish, and you buy currencies that are bullish, and hopefully you make money. That's the theory. Not as simple as it sounds, but believe me, with a lot of practice and using the right techniques and the right indicators, it can help a lot, really can. So what the hell happened in the week? Okay, so let's this is Monday. Monday can be a slow start, guys, normally. I'm just going to whack this down. What did we get out to? I hope you can see this. The Swissy, actually, by about late morning London, early US, it got out to about 40 or 50 pips there. You can't see that, but trust me, it is. And if I just bring this up, see what this is telling me, about 30 pips. So there was some better action on the buys than the sells, and it was fairly split 50-50. By that I mean you've got 3 or 4 currencies down here, 3 or 4 currencies up there. So the market isn't really gravitating to 1 or 2 main movers. It's very much all over the place. So there's quite a lot out there, quite a lot of options. I prefer to see that having moved out to about 50 pips, positive or minus, in London session. That way I can guarantee I'm going to make some pips. But this should have been enough. When I am scalping, I will obviously focus much more in this area, go down to the 1-minute charts and get this set up much more accurately, so the whole screen represents what's going on, say for even London. But because I'm taking a more holistic view here of the week, I'm just trying to give you an overview. So there was money Monday. What do I think? I think as the US session came on, this would have been US session, US dollar, which obviously drives a lot of the trading, guys, and a lot of scalping, because US dollar pairs obviously offer very tight spreads. US was very kind, very bull US dollar. US dollar getting out, by the end of the evening, US evening, into the 40s. That's a good move for the US dollar. So really, that was where the money was, the US session. And what were you getting? Well, you can see sterling down here, you can see the euro down here. So a couple of the European currencies, and also yen, very weak. So they were really the main plays. For me personally, what would have been going on, came into Tuesday here. Tuesday was a big bad bear for sterling. Look at this, flat sterling, and then bang. Obviously something going on there. Honestly, I know I should have had a look at this. I can't remember what happened Tuesday. I don't think I was trading by then, but obviously big sell-offs all the way down. Look across here to the right and you'll see that sterling came off to over 100 pip sell-off. So if you were smart or lucky enough to be still sitting on the bull US dollar here, US dollar by now got us out to plus 70 on the 2 days. So GU selling was very lucrative. What else was going on? Yeah, you could have been selling euro into the dollar. But basically, really, if you were selling most things into the dollar, you're doing well. And the Swissy, unusually, very weird. And the others were moving around. Yen came off dramatically. I think this was moving into, that's the London session, into the US. And look at that, it came all the way back. So it's drilled down here and it came all the way back. So again, if you were buying yen, that was a very good Tuesday. Remember, you've got to look for currencies that are moving in opposite directions. So if you were trying to buy UJ, you wouldn't have been too successful. You see how the US dollar is bull, the yen is bull. You can't trade those two. They're going to be running at relative parity with one another. Through that period, you're not going to see much action or volatility or spread on the actual pair itself, because they're not moving against one another. They're moving with one another. Remember, the way you trade is you have to find one currency that's bull, one currency that's bear. That's the way you make money in forex trading. What happened Wednesday? Indexes, individual currencies tend to move and behave exactly the same as pairs, believe me. So to me personally, we're out here at the hundreds. I mean, sterling, given the volatility of it and the Brexit and everything else, sterling obviously is a very volatile currency at this time. So that could have easily sold off more and more. But you can see here, I'm gonna do this, bring this down as well. You see how we got into a bit of a range here. See this moving around? That's about a 20 pip range, guys. Here's a fake off, late Asian, early London, fake sell off there, comes back and then bang. See this line, which technically this area was kind of resistance, bang, straight through all the way out. That's like a 50 plus pip move there. So again, if you were sitting on that, got lucky, good luck to you. But very volatile Wednesday. Wednesday is a day traditionally when currencies tend to start reverting back to mean, if you see what I mean. So generally, and again, I'm only giving you a generalization here, the market does what the market does, guys. I can't predict it. No one can predict it. But generally, I find by Wednesday, if you've had a good move on a currency and it's getting out to the 100 plus, look for it to come in a bit. Traders will be starting to take a few profits on it. They'll be getting nervous midweek, and sure enough, that's what actually happened to sterling. Now, I'm not saying I traded that. I can't remember. I know I was trading. I might have been trading around lunchtime Wednesday. I can't remember, yeah, it came back. If you could watch up here, and again, a little messy, yen actually came off as well. But the real story was, a lot of traders would have been watching here for an oversold sterling, looking for the retrace, and it came back. Up here by now, you really need to be thinking both the Swissy there, the grey Swissy, and the greenback, the green USD. To me, little overcooked, guys. What are we looking at? We're looking at about 70 pips. They're both around 70 pips there. I think personally they're overcooked. As you can see, neither of them went much more than that. The Swissy had a good week. In fact, the Swissy ended strongest in the week, held at the 70-80 level. But even the Swissy struggled. You see what I mean? It started to come off. You weren't going to get much more out of it until a late burst, or a burst into Friday. This isn't, remember, M Friday. Friday continued. I just haven't got it on the charts. But you can see that US dollar actually was overcooked by then. Wednesday was the best you saw it. It went up to about plus 60, plus 70 pips. After that, sell-offs all the way through. Okay. Thursday, again, I would trade these and scalp these individually, so I wouldn't be looking at this on a a composite basis like we have here. This is actually more interesting if you're trading more longer term, higher time frames, because obviously you're looking for the position through the week. Thursday actually was fairly flat. The yen there, yellow yen, a lot of sell-offs there. So yen was a big sell through London and to a certain degree some of US. Then it flattened. Aussie D, nice sell-off. CAD, phenomenal rebuys on CAD. Look at the CAD. CAD opened up early or during the Asian session, minus 70s for the week. Managed to get up by early US. Plus 39, there's an 80, there's a 50, 60 pip move. Again, if you're on it, great. Mostly though, very difficult to get on these kind of moves. You have to be lucky, to be honest. I never confess to being skillful at those things. I might have been sitting on it. Obviously this early part here where you're starting to see it pick up momentum into a run, sure, you're going to be sitting on that. You'll probably be sitting on CAD. You'll be trading it probably against USD. So remember what that is. That's a UCAD sell, by the way, guys. Remember, the CAD is the second part of the UCAD. So whatever CAD's doing, you have to invert it on the chart itself. Okay, so UCAD sells there, and perhaps I did pick that up. Again, I can't remember what I was doing Thursday. I know I was busy on my consulting business, so I may not have been in there. Friday can tend to be pretty damp squib, to be honest with you. Also notice that a lot of the currencies that were out here, you see anything that was out here, you see how most stuff, alright, the turquoise New Zealand dollar and Swissy were still out here, but other stuff's kind of condensing in. Why? Generally because traders are looking to close out trades and come back in for the week. They're looking to pack up early, go home, sail their boats, live in their $1 million mansions, whatever they claim to be doing. So Friday can be a quiet one. If the guys have made their money through the week, most of them, depends what's going on Friday, but most of them then say that, what, the hell with it, I've made my money, made my quota. So fairly flat. Well, it's flat up to this point. Not sure what happened after this. All hell might have broken loose. CAD did come off. CAD again having a big swinging week actually. CAD plus 20s, plus 30s down to minus 70s. That's a nearly 100 pip swing on CAD through London session, early US. So again, big old week. Okay, very quickly, guys. What I'm going to do, I'm going to condense that because I know we're running out of time. What I'm going to do is I'm going to bring up the Fxcorrelator. This is the highest setting I kind of tell people to use. This is on the 4 hour and this is a 60-minute Fxcorrelator. This is free, and I just wanted to show you where one would have been, where your if you do use the triple corrie, which is available for free at my website, it shows 3 arrows. What you're trying to do is get these arrows all in the same direction, which is where you probably have the best chance of then trading that currency. So you can see here, for example, as this chart ended, we had 3 arrows there on the euro, blue euro. So euro was a buy. Okay, so what I'm showing you at the bottom here, okay, this one is the 4 hour on a 60. This is this line. So when we get around here, everything up here that's shown as arrow should be correlating to what's showing above and below the line here. Okay, so let's see what was going on during the week. What were we saying? Well, we came into the week with CAD as a definite positive buy. So up here, I really was following CAD pretty much through the day as a buy. So what does that mean? Well, what it means is that, for example, if I were choosing to use my triple corrie system, and because CAD really on the higher time frames is a buy, up here on Thursday when CAD has a rocket buy, it definitely would have been telling me to buy it. I wouldn't have been so keen to sell it through the week. Why? Because on here the CAD, which is now shown as a sell, but the CAD during the week was mainly a buy. You see what I mean? Mainly a buy. So I would have been sitting waiting for this. Okay, I'm not saying I do trade that, because I scalp a lot more than I do at higher time frames, but that's what I mean. And indeed, just to give you another heads up here, you can see here, red sterling. Red sterling was sitting as a sell, came into the week as a sell, 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 sell. In fact, it's been a sell pretty much all days. So what does that mean, guys? Well, what it means is that up here, it means that on Tuesday you were trading this down. You wouldn't have necessarily been so keen to buy it. Again, you have to go with your own systems and strategies, but if I was trading the 3 ducks or the triple corrie, wouldn't have done it. Why? Because down here sterling is a sell. Don't care if it's come back, it's a sell. If you follow these rules, you don't have to follow them, that's what you got to do. Okay, then it's sold off again, few sells, but again, you know, it petered out towards the end of the week. That's how I use the triple corrie system. That's how I recommend people use it. You can change these settings, but that's the default. 240 on a 60, on a 60 minute, a 60, and also the 5 minute 60. They're your 3 things. Okay, so that's pretty much the week. This is MVP signing off. You know where I am, always to be found at fxcorrelator.com. I'm also at Trade to Win, also at Forex Factory, and I'm also on Twitter. Have a great weekend. I hope it brightens up for all of us in the UK if you're based in the UK, and we will talk next time. Cheers guys, bye.